Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald. As the third quarter comes to an end, I've invited Max Roth, Chief Investment Officer at BCV, into the studio to discuss the year so far and what we can expect from the all-important final quarter of 2012. Max, thank you very much for joining us once again.
Hello, Nancy.
Now, I understand that yourself and your team have been concentrating a little more on European stocks of late. What trends have we seen emerge this year? Has there been a change in strategy sort of as the market looks to combat the global crisis?
Well, European crisis was very active this year, as you know. Well, the question was more to assess the future monetary policy and which measures are going to be taken in regard to this acute crisis in Europe. And the challenge was not so to be right on the economy, but to be right on the future policy. And end of July, Mr. Mario Draghi made an important assessment regarding the crisis. And now it was quite clear at that moment that we get finally the information needed. Where are we going to go regarding this crisis? What steps are going to be taken, especially to what regards the central bank policy. And you see that Spain has bounced up more than 30%, Greece more than 50% in stocks value. So you see the reaction of the market. Finally, a certain level of uncertainty has been erased from the market. And that's where we stand. Now the question is, will growth in the economy now take a rebound, or is it going to further slow down?
With this in mind then, what can we expect going forwards?
Our view is that in some extent the economy will start to pick up again. The leading indicator portrays rather positive outcome. It will be a bit choppier along the line, of course, because the crisis is deep. But at the end, we think that we are going to muddle through. To what regards the future now, more precisely, we are quite positive until US election, and we understand to what we hear from Eurogroup that Spain will certainly ask for help. That will decrease the cost of borrowing for Spain. But Spain is not ready to ask for help under the condition to have more restriction in the economy to be implemented. So now behind the scene there are some talks in order to get out of this problem. I think finally Spain will get what they need, but also Eurogroup has to give the impression that they are still tough on the condition. So we expect from beginning of October this to be solved and the market rise again until US election. After, we have the famous US cliff, budget cliff, fiscal cliff, and this will be an issue. I think it would be nice if we see some nice upswing in the stock market, to take some profit and reassess later, maybe in December, how this problem will be solved in the US. That's finally our strategy going forward.
And lastly, Max, if we just look at the Swiss stock market very briefly, this again is something that's experienced volatility throughout 2012. If we take last week, just as an example, on Monday the SMI dipped after the Swiss government cut growth targets, yet Friday it hit an 18-month high following discussions over a Spanish bailout program. Does this again sort of go back to what we've said already about the concentration on central bank comments and what's going on in the broader economic sense?
Yes, definitely. And even for the Swiss economy, if you look not at the past data, because last quarter was past data, if you look at leading indicator for the Swiss economy, they are still quite friendly. The slope is upward. If you take the cough leading indicator. It will be released later, but it's still on an upward slope. So given the central bank friendly environment and the possibility that the indicator bottoms up, the markets reasserts itself, and now we are higher.
Max, thank you very much. Always great to have you in the studio.
Thank you, Nancy.
I'll be back shortly with more exclusive interviews. For now though, goodbye.